everyone. My name is Marilena and I will be your hostess for today. Together with me, I have Peter, our senior market analyst at IronFX. Hello, Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals and driving the markets currently. So, Peter, a new week, a new month. How are the markets behaving?
Well, it's a new week, a new month. The US dollar seems to be continuing to be weakening against its counterparts. It seems that the market's hawkish expectations about the Fed's rate hike path have eased somewhat. It's characteristic that the market now is seemingly pricing in a 50 basis points rate hike in the September meeting, which more or less tends to highlight this possibility of the easing of the hiking path of the Fed. On the other hand, though, the lowering of the market's expectations more or less allowed US stock markets to continue to rise, which, mind you, are still having their attention turned towards the earnings reports which are being released every day.
And which earnings reports would you highlight today?
Well, there are not many. I would be highlighting mostly Pinterest for today. We expect that there will be more high-profile companies which will be releasing the earnings reports in the coming days and could create substantial volatility. But for today, it's practically Pinterest.
Okay, and what's on the calendar for today?
In the calendar for today, I would be noting for financial releases practically from the US. The ISM manufacturing PMI figure is for July. A drop is expected, which could be signaling a slowdown in the expansion of the US economy somewhat, at least for the manufacturing sector, and could weaken the US dollar. It was characteristic that during the Asian session today and on Sunday, we had the release of China's NBS and Caixin manufacturing PMI figures. Both for July, both dropped and both tended to imply even a contraction of China's manufacturing sector's economic activity, which was a little bit worrying. We're going to have to see how the US release is going to be behaving and how the actual indicator will be dropping, how wide the drop will be.
Interesting. And what about the monetary front?
Well, on the monetary front, we have RBA's interest rate decision that's due out tomorrow during the Asian session. The bank is widely priced in to hike rates by 50 basis points. It would be noteworthy to mention that practically Australia's CPI rate accelerated for Q2, so we have high inflationary pressures. It's characteristic that RBA had started to hike rates in May, even delivering a double rate hike in June, and CPI rates still accelerated. So we may see the bank being a little bit more decisive. The Australian employment market is also quite tight, so that would be allowing for RBA to remain quite hawkish. On the other hand, we have to note here that despite RBA delivering a double rate hike also in the last meeting and maintaining a rather hawkish tone, the Aussie failed to actually capitalize, to gain on the release. Once again, we will have to wait and see how hawkish the bank will sound in Governor Lowe's accompanying statement tomorrow during the Asian session.
And what could move the markets in the coming days?
Well, we have a number of events which are quite interesting. I would be making a start practically on the monetary front with BOE's interest rate decision. That should be on Thursday. Now the bank is expected to hike rates by 50 basis points. That would be a first, because up until now, BOE had hiked rates by 25 basis points at each meeting. Yet inflationary pressures in the UK economy are pretty high, and that could be driving the bank to tighten its monetary policy at a faster pace, i.e. widen the rate hikes to a 50 basis points, but I expect it to be a pretty close call. Because on the other hand, should BOE start tightening its monetary policy too fast, we may see the UK economy more or less weakening, and that could lead to stagflation. I would also note that the bank has also the option of tapering its QE program, something which had been mentioned by BOE Governor Bailey. Mind you that BOE Governor Bailey had a clear, very notable shift in his comments. It was last June when he made some comments about the bank may not be forced to act more intensely. However, that changed about 2 weeks ago, where BOE Governor Bailey practically highlighted the possibility of the bank hiking rates by 50 basis points and tightening at the same time, also tapering, if you prefer, its QE program, which could be draining the liquidity out of the markets. And should the bank actually deliver 50 basis points rate hike and sound hawkish enough, taper its QE program, then we may see the pound gaining some support. The main release of the week, though, is expected to be the US employment report. That's for July, that's on Friday. And we expect that the NFP figure could be dropping. The unemployment rate is expected to remain unchanged at 3.6%. Now, the question is, how do we read this reports? That would be implying that on the one hand, we still have a rather tight employment market in the US, given that the unemployment rate remains unchanged at 3.6%. On the other hand, though, it seems to be losing its ability to create jobs as the NFP figure is dropping, so that may be advising some caution. The release on Friday is key because practically after the release of the PCE price, core PCE price index on Friday, the next big test would be exactly the employment data for July, given that the Fed has a dual mandate. It has to watch over high prices, keep them rather stable, while on the other hand, it has to promote maximum employment. So the employment data for July are expected to be key. Other than that, from the US, I would also be noting the factory orders. I would be noting also the ISM non-manufacturing PMI figure. And another currency which seems to be quite interesting would be the CAD. And the reason practically the financial releases in the next couple of days would be A, the trade data of Canada, and should we see a shrinking of the trade surplus of Canada, we may see the CAD weakening somewhat. Finally, on Friday, we get Canada's employment data at the same time as the NFP figure. And should we see a tightening of Canada's employment market, we may see the CAD gaining some substantial support, as that would practically allow BOC to maintain its hawkishness in regards to the tightening of its monetary policy.
Any final comments, Peter?
Well, we're entering the holiday season. It's August. So we may see a number of traders taking their holidays, and we may see some thin trading conditions starting to apply on the market. At the same time, though, I would like to see how the American session is going to be actually moving US stock markets, whether this more optimistic view is going to continue to support US stock markets. And on the other hand, though, the number of high-profile companies which are to release their earnings reports is expected to be smaller, so we may see the interest in the market slowly but steadily degrading.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yassir.
Welcome to the technical analysis part of the presentation for today. So On your screens, you have, as usually, the 4-hour chart of the USD index. We're kind of used to make a start with this. Please mind you that all charts which will be shown will be at the 4-hour time frame unless otherwise stated. So the US dollar seems to have maintained its downward motion, and that would be since the 27th of July. And it's characteristic that it decisively broke the 105.90 support line, which now has turned to resistance. Let's make the necessary corrections here. Turning it to resistance into coloring it in red. And let's go hunting for a new final support line. Drilling out to the daily chart, I would be noting this peak here as a possible support line. Next support line would be somewhere between this peak and this true. For the time being, let's keep it here. In green, please, and that would be the 99.50. Drilling back into the 4-hour chart. Let's readjust the labels as well. Readjusting the positions. Now, there has been, as we have mentioned in the fundamentals, some easing of the market expectations for hawkish Fed, and that tended to weigh on the US dollar. Let's make a start with the resistance lines. The 111.40 is no longer valid. We switch it to the 109.40. Sorry, that'd be 109.10. 109, the R2 now becomes at 107.20. The R1 is being placed at 105.90. The first support line, now placed pretty lower, would be the 103.45. Second support line being placed at 101.25. And the final support line, as we've seen before, would be at 99.50. Lock them in. Now, the first observation is that there is a clear downward motion of the US dollar index for the past 3 days. That would be Thursday, Friday, and today. Let's draw also a nice downward trend line showing this somewhere here. It's characteristic that the index has broken the lower boundary of its past sideways movement. That would be the S now turned to R. 105.90 support line now turned to resistance. It's characteristic also how the pair failed to break above it once again, despite trying actually, and the level provided some resistance. So we tend to maintain a bearish outlook for the index as long as it remains below the downward trend line we have just drawn. Mind you that the index's price action has broken the upward trend line, which has been guiding the index since the, let's have a look. Yeah. Since the 30th of May. And the second is pretty close. It should become more obvious in the daily chart. There you are. You can see also the relevant touches where we found the support lines. Pretty obvious, huh? Okay, let's drill back down to the daily, to the 4-hour chart. So should the bears maintain control, something which is quite possible, given that A, there has been already a downward movement for the past 2 days. B, the RSI indicator, you can see it below, is aiming for the reading of 30. C, the price action has remained in the lower half of the Bollinger Bands, which in our opinion tends to also provide some bearish tendency signals. Also note how the 20 moving average, which is the midpoint of the Bollinger Bands, has taken a downturn. Should the bears maintain control, I wouldn't be surprised to see the price action breaking also the second upward trend line and start actively aiming for the 103.45. Maybe even breaking it. On the other hand, there seems to be some hesitancy. There is not that wide downward volatility movement. So should the lower upward trend line be providing some support, we may see the price action reversing, once again breaking the 105.90. And for a bullish outlook, we would require clear breaking of the 107.20. At the same time, that would be shifting the R1 lower and turning it into a support line. Once again, for the time being, bearish outlook, and we expect the price action to break the second upward trend line and start aiming for the 103.45. Let's have a look at Euro USD. Should be a similar movement in the reverse though. No, it's not. Now there has been some upward movement of the pair, which is quite evident. Let me reuse this one. But in my opinion, that's not enough. I tend to maintain my bias for sideways movement for Euro USD between the 1.0275 and the 1.0110, the R1 and the S1. Note how the R1 was tested here once, twice, 3 times, so it's quite valid. Also back here 4 times, while the S1 was extensively tested here. And for a bullish outlook, I would require the price action to have a clear break of the first resistance line, namely the 1.0275. For the time being, we tend to maintain our bias for a sideways movement between the R1 and the S1. Should the R1 be broken, the next possible stop could be the 1.0380 resistance level, which used to be a support line once, twice, 3, 4 times here. Yet, as the price action is below it, its role has been reversed, and now as a support line, it's no longer valid. It's a resistance line. On the flip side, should the pair stabilize, I would expect it to break the upward trend line which we have just drawn, yet respect the 1.0275 and the 1.0110. So I would expect a movement something like this. Remain with this within the spectrum. Should the bears take over, we would expect the price action to break the pre-mentioned upward trend line. And for a bearish outlook, we would require a clear breaking of the 1.0110 and the price action to start actively aiming for the parallel level S2. For the time being though, please note that the RSI indicator is above the reading of 50. It seems that the bulls are gaining some ground among the market sentiment. At the same time, note how the price action is flirting with the upper Bollinger Band, which is another indication of a bullish sentiment. Yet at the same time, the upper Bollinger Band may not allow the bulls to take over and actually slow them down. Once again, for a bullish outlook, we would require clear breaking of the R1 1.0275 and the price action to start aiming for the 1.0380. Also note that there is a wide downward movement. Here it is, with a downward trend line, which still has to be tested. And it was initiated on the 10th of February. So one could here argue for the bears, in which case we would expect it to once again break the upward trend line, break definitely the 1.0110, and start actively aiming for the parallel level of S2. Let's have a look now at cable. Cable, which is moving clearly upwards. $1.27 it was. We extend the upward trend line here. Note how it has steepened over the past 24 hours. And has broken the 1.2185 resistance line, which now has to be turned into a support line. Here you go. Let's go hunting now for a new resistance line. That's an ultimate level. And this level seems nice. Could be even somewhere up here. Yeah, that's a nice top. Somewhere here. And that would be in red. The 1.2660. Let's make the readjustments also in the labels. It's interestingly to note that the pair has been on the rise for the past 2 weeks. You can see the vertical lines which are marking the beginning of each week. Now here it was lower, but here it went up, and practically it ended the second week in the greens and is still rising. And the final resistance line, which we have just placed, would be the 1.2660. So we tend to maintain a bullish outlook for cable as long as it remains above the upward trend line, which has started to form since this point here. That would be the 21st of July. Should the bulls actually maintain control, because we may see some corrections lower here, note that the RSI indicator has almost reached the reading of 70, which is nearing overbought levels. So I wouldn't be surprised to see it breaking above it and then correcting a little bit lower. But overall, the bullish sentiment seems to be remaining. So should the bulls actually remain in charge, we may see them breaking the 1.2330 and start aiming for the 1.2480. Note also that there is a slight steepening of the upward motion. Note that it has reached the highs of Friday and it's still moving higher. So there would be a new high 1, 2, 3, 4. The next one could be somewhere here. On the other hand, we have truths, which are also higher. And I wouldn't expect it to break the upward trend line for the time being, but that's still a possibility. And should we see a market sentiment reversal, that could practically weigh on cable and the price action breaking the 1.2185, definitely break the upward trend line and start aiming, if not even testing, the 1.2070. We would require that for a bearish outlook. Let's have a look at USD/JPY. We're entering safe haven area here. Oh my god. Oh yeah. Nice deep downward trend line. Definitely grabbing the chance here. Okay. Let's make the necessary corrections. 134.70 becomes now a resistance line. Also the 133.15 becomes a resistance line. And the first support line is being placed at 131.50. Let's find new support lines. I would place one here. As we have touches to the downside, the support line and also resistance. So that would be the 129.60 in green. Now we could go all the way down here, but I think we're missing out on truths here. I would like to see a level here. See this peak here? Could go a little bit higher, a little bit lower. No, I'm keeping this one. I'm placing another one here. We have one touch as a resistance line, a second touch as a resistance line. We have multiple touches here. So it's a level which traders tend to keep an eye out. I know it's been a resistance line in the past, but given that the price action has moved decisively above it, has now turned to a support line. Let's drill out. And that would be the 128.30. $129.60 is going to be the next support line. First support line to be met, should the bearish tendency continue, would be the 131.50. Note the reversal of the downward movement back here and back to an upward motion, so it's quite valid. First resistance line, 133.15. Second resistance line being the 134.70. Final resistance line being placed at 136.75. Another element which I would like to see. It's an automated report in our case, back in the office, but have a look also how wide the candlesticks are in the daily chart. And zooming in, it would be for Thursday of around 246 pips. For Friday, 220 pips. And today, at 145, 49, 150 pips and still going downwards. So we have a widening of the downward motion, more decisive downward motion. And it's characteristic that in the 4-hour chart, let's drill out, you can see how decisively the bearish movement is, as the RSI indicator below the 4-hour chart at some point even tried to correct above the reading of 30, but it was able to remain above it only for a brief period and quickly dived once again lower, indicative of how bearish the sentiment is for USD JPY currently. On the other hand, although we have to note here that the RSI indicator may have reached oversold levels, and that could be implying that the pair is ripe for a correction higher like it did on Friday. That possibility should not be neglected either. It could even shift the downward trend line a little bit to the right. On the other hand, though, we have to note that the price action is practically flirting with the lower Bollinger Band, but still has some room. So for the time being, we tend to maintain our bearish outlook. And I would expect the price action of USD JPY to drop, breaking the 131.50 and start actively aiming for the 129.60. Okay, let's have a look now at the second safe haven currency pair. That would be USD CHF, also with a downward motion. In my opinion, despite the breaks, which it had here, 1, 2, 3, the downward trend line still continues to guide the pair. And that would be since the 14th of July. Let's make the readjustments. Definitely the 0.9550, given that the price action has moved below it, now turns to a resistance line. Now for all of you Swiss franc traders out there, take care when Switzerland CPI rates for July are due out this week. Now this is a nice touch. It's a nice downward touch and encompasses practically the sideways movement of the pair from the 6th to the 12th of April. While it had also tests as a resistance line. It was broken briefly here. Seems to be valid. I'm keeping this one. That would be the 0.92 in green, 0.85. Let's make the readjustments also for the labels. Bring them all down to adjust to the downward motion of the pair. Okay. Final resistance line being placed at 0.9755. Second resistance line being placed at 0.9640. First resistance line being placed at 0.9550. Third support line being placed at 0.9450. So that would be 55. Second support line being placed at 0.9375. And final support line being placed at 0.9285. We tend to maintain our bias for a bearish outlook, for bearish movement of the pair, as long as the price action remains below the downward trend line, which we have mentioned earlier on. In addition to that, I would also note how the RSI indicator has reached the reading of 30, which would be implying a rather bearish sentiment. Should it drop even below 30, that could be a sign or a signal that the pair has reached oversold levels and could be ripe for a correction higher. Once again, I wouldn't be surprised to see it respecting or briefly even breaking the downward trend line. It has done it in the past once, twice, 3 times, 4. Yet should the bears maintain control, I wouldn't be surprised to see the pair breaking the 0.9455 and start actively aiming for 0.9375. On the flip side, should a correction take place and the pair stabilizes, I would expect it to stabilize between the 0.9550 and possibly the 0.9455. A breaking of the downward trend line would be a clear signal of a trend reversal, and should the pair not be satisfied with a sideways movement, we may see it breaking the prementioned downward trend line. We would require a clear breaking of the 0.9550 and for the price action to start actively aiming for 0.9640 resistance level. Note how it provided resistance here, here, and support here. Let's move to commodity currencies and make a start with USD CAD. USD CAD, which has been moving in a downward motion. Let's make the adjustments. There we are. And there is a nice downward trend line as it seems. Let's have a look. Yep, here it is. It's a slight one, but seems to be valid. It's driving the pair lower. It was able to break the 1.2825 support line, now turn to resistance. And we tend to maintain a bearish outlook for the pair as long as it remains below the downward trend line, which has been guiding the pair since the 25th of July. Should the bears maintain control over the pair, I wouldn't be surprised to see the price action slowly but steadily approaching, if not even breaking, the 1.2720 support line. The American Open should provide us with a clear idea, more clues about where the pair is heading to, given that both the US dollar as well as the CAD is expected to be more active in the American session. Should the pair stabilize, I would expect it to remain between the 1.2825 and the 1.2720, somewhere in this area here. While should the bulls take over, we may see the price action reversing direction, breaking the downward trend line, breaking the 1.2825. Both would be required. And for bullish outlook, we would require the price action to start actively aiming for the 1.2945 resistance level. Note how strong the R2 is. It touches the resistance line here, support line, resistance line, support line, support line, support. It's quite valid. Okay, let's have a look at the second commodity currency pair. That would be AUD/USD in an upward motion, which seems to be continuing, maybe even intensifying a little bit. Yep, somewhere here. So we have practically an upward motion, which is being guided by an upward trend line, and that's been the case since the 21st of July. The pair has been marking higher truths, one exception here, but still. And we had also higher peaks It's not much, but still high. It's characteristic how the pair currently trades at a point just above the high point of Friday. Once again, on the fundamentals, we may see the price action increasing volatility given we have RBA's interest rate decision tomorrow during the Asian session. And I would be noting that the previous one did not have much of volatility, but 30th, 4th, 5th, note the drop. Nevertheless, should the bullish tendencies be maintained, and we expect them to do so as long as the price action remains above the upward trend line we have noted, then I wouldn't be surprised to see the price action breaking the 0.7070 and start aiming for 0.7155. Note that the RSI indicator is above the reading of 50, actually aiming for the reading of 70, which is another bullish signal. On the other hand, the price action has reached the upper Bollinger Band, and that may be slowing down the bull somewhat. Should the pair correct lower, I would expect it to stabilize somewhere between the 0.6980 and the 0.6875. On the other hand, we may see a bearish outlook should the pair break the 0.6980, definitely break the upward trend line we have mentioned, break the mid level which is placed at 0.6920, aim if not even break the 0.6875 support line. After this upward movement, I would require a clear downward movement to switch my bullish outlook in favor of a bearish outlook. For the time being though, the base scenario is for AUD/USD to continue to rise, possibly breaking the 0.7070 resistance level, a level which provided resistance back here. Okay, let's have a look at gold's price. Once again, for our chart, the weakening of the US dollar has allowed gold's price to jump higher, breaking the 17.63 resistance line. Now turn to support. Given that the pair has been, the precious metal has been able, I'm going to be placing the new resistance line somewhere here. See the touches? Could go even higher. Yeah. Yep. 1, 2, 3 resistance, and now support here and here. That seems to be valid. And that would be the 1845 resistance line. Let's color this in red, please. Yep. Pretty wide, but not unusual for gold's price. And we have to note here that the daily chart, which you're seeing right now, is something which could be covered within a day easily. It had done so in the past couple of times. So it's not wide enough to be avoided, in my opinion. Drilling back down to the 4-hour chart, let's correct also the labels. As we have switched the 1763 resistance line into a support line. Final support line being placed now at 1715. Second support line being placed at 1740. First support line being placed at 1763. First resistance line being placed at 1793. That's $30 difference, quite wide. Second resistance line being placed at 1813. and final resistance line being placed at 1845. Ladies and gents, we have an upward movement of gold's price, breaking the 1763 support line, now turned to resistance. We tend to maintain our bullish outlook, given that the RSI indicator below the 4-hour chart, despite correcting a little bit lower, still remains pretty close to the reading of 70. Also note how wide the room is for the bulls to go upward if compared to the price action currently with the upper Bollinger Band. Should the bulls maintain control as expected, and I would like to draw a trend line here, somewhere here. I wouldn't take it from this side. I think the clearer direction was provided here with the lower higher chows. Note how the precious metal seemed to be stabilizing just above the 1763 and pushed upwards during today's European session. I wouldn't be surprised to see it correcting a little bit lower and start aiming for the 1790, if not even breaking it today, or if you prefer the next 24 hours. On the flip side, should a stabilization take place, most probably it would be between the 1790 and the 1763. It's a wide spectrum which could accommodate a stabilization. While should the bears take over, I wouldn't be surprised to see the price action reversing direction, breaking the upward trend line we have just drawn, which would be a first signal of a trend reversal. Yet we would require clear breaking of the 1763 and for the precious metal to start actively aiming for the 1740 support level. So that should sum it up for today. Tomorrow we'll have a look at US stock markets as well. From my side and from IronFX, best wishes for solid trading.
Carry trade refers to the trading strategy with which traders sell a currency at a low interest rate and invest in another asset that has a higher rate of return. In forex trading, interest is debited or credited daily from a trader's trading account based on open positions. Now, let's say that the US interest rate for a deposit is 2%, while in Europe is 0%. If the rate for the Euro-USD pair remains stable in the following year, those traders that are aware of this would borrow funds from Europe but make a deposit in the US. This way, they would benefit from the difference in the interest rate, that is the 2% risk-free return. This type of trading method, where money is carried to another location, is called carry trade. In fact, did you know that selling JPY while buying AUD, GBP or NSD has been the most popular carry trade for the past few years? Taking another example, if traders want to borrow 1 million euros to carry the US with an interest rate of 1.10 for Euro USD, they would actually be depositing $1.1 million in the hope of receiving back $1.122 million next year. Assuming that the interest rate remains the same, the trader would get back 1.2 million euros, hence a 20,000 euro profit. However, since exchange rates usually change, if the exchange rate changed to 1.11, the trader's profit would then be reduced to 10,800 euros. In any case, carry traders are not an easy endeavor, but rather a high-risk strategy that requires traders to have years of market expertise and solid risk management techniques in place. Stay tuned for more.
All right. Right. We're gonna begin today's webinar. It's a pretty straightforward webinar. It's not as exciting, right? It's not exciting, but it's actually pretty important. It contains pretty important knowledge on how to use fundamental analysis when it comes to trading, because using fundamental analysis, sometimes people get too caught up reading, right? People get too caught up learning fundamental analysis, right? Reading about the news, and there's actually a time to do that, and there's a time to not do that when it comes to using fundamental analysis. All right, so I want to take this session, all right? I want to take this session to kind of just explain to you guys, right? And if you have any questions, feel free to send them through. This webinar is recorded, right? Of course, as part of the bigger IronFX Academy, right? That we are, it's our goal here to kind of educate you guys on not only technical analysis, but also fundamental analysis. All right. So let's begin today's session. There is a chat section, a chat button which you can click on to just send your questions through. Right. I want to encourage you guys to do that anytime you can. Right. So any question you have, just send it through. I'll do my best to answer them along the way. Right. But I'm going to give you an institutional trader's perspective behind fundamental analysis, right? And how you can use it effectively in trading. Okay. Now, some things for you guys to take note of, right? This disclaimer is that this webinar is purely educational in nature. So nothing in this webinar should be construed as investment or trading advice. Please do your own little due diligence before you guys trade. All right. Now let's begin today's session. Okay. Now, for those of you guys who are here for the first time, just a quick introduction to myself. My name is Desmond Leong, right? I run the award-winning research firm Everest Fortune Group, and also finalist for the 2019, 2020, 2021 Best FX Research and Best Equity Research, right? So we're a strong team of traders over here, right? I run my sound is breaking. Is it from my end? I'm not sure if it's from your end, Lawrence. Benjamin or anyone else, right? Are you guys able to hear me clearly? Not sure if you guys can hear me clearly. I can do a quick mic test. Just let me do a quick mic test. Testing. Oh, select speaker. Testing 1, 2, 3. Testing. Testing 1, 2, 3. Yeah, Lawrence, I think it could be on your end, because I've just tested it with Zoom. It seems like it's working properly, right? So do check it out. I'm not sure if it's maybe the speaker or something, right? But yeah, the sound is working properly, right? Do check it out, and if you have any I can hear you. The sound comes and goes, right? Try to relog in again, right? See if it helps, right? I think it should be. Is your sound working for like YouTube videos and stuff? If it's not working, maybe you can try play a YouTube video. If it works, then it could be this mic over here. But I've just tested it on Zoom. It seems to be working properly, right? So I'm just going to continue bit by bit. All right. So yeah, guys, I just this is a quick introduction about myself, right? If there's anything, Lawrence, I don't think you can get it. You might be able to get it in your email, but you'll also be able to get it if you go to I'm going to click a link here, IronFX YouTube, right? I can send a link here for you guys to take a quick look under playlists. right, you want to look for this playlist called IronFX webinar series, right, for beginners. This is a link that you guys want to go to. Watch all the previous webinars that we did, Technical Analysis 101, right? Live trading sessions. Go check it out. All right. Now, let's begin today's session. Then go on really quickly with it. All right. So some of the things that you need to take note of, right? In what we're going to cover today, we're going to cover really quickly, what is fundamental analysis, using the economic calendar, right? Then we're going to look at known unknowns, right? It's an interesting concept. Right? It's basically, it teaches you what are the news events. You know it's coming, but it's an unknown outcome, right? Then we look at time versus price sensitivity matrix, followed by microeconomic analysis and the VIP room, which I should be releasing to you guys either today or tomorrow, right? We finally got it ready, right? It's a pretty nice, great place to kind of go in and ask us questions. All right. Now let's begin today's session, right? So what exactly is fundamental analysis, right? So fundamental analysis, think about it as like you are doing a health checkup, right? Think about it like you're doing a health checkup, right? In most circumstances, you go to a doctor, he does a health checkup, he monitors your blood pressure, he monitors your cholesterol level, monitors a few of these things, right? And from there, right, you can more or less get the gauge of your health. Are you healthy? What's your blood pressure, right? Are you have good cholesterol level, right? Your liver enzymes, you got all these different things that, can use to have a good gauge whether how your health is doing, right? Fundamental analysis is very similar to that, but fundamental analysis is like you're taking the health of the country, right? Taking the health of the economy, right? You're going to take what's the inflation numbers, what's the GDP, what's the growth, just measuring these few little different key metrics. And then from there, you can tell more or less the health of the economy, right? If the health is good, that means, you can expect the currency to strengthen, right? If the health is weak, that's where you can expect the currency to weaken, right? So that is the case when it comes to fundamental analysis, right? Don't let the words scare you off, or it doesn't sound that complicated, right? Essentially what it does is it just allows you to monitor the health of the economy. Okay, now moving on from here, right? One of the places that you want to take a look at, right, to get the readings about whether it's the inflation, the GDP, the interest rates, right? All these different numbers, right? You're gonna wonder, where do I get them from? You actually get it from the economic calendar, right? There are many different kind of economic calendars out there, but you can see, right, on IronFX, when you go to IronFX, there is this page where you can go to economic calendar, right? And it actually shows you, right, what are the key news events coming up, right? You got the recent one, you got today's economic news, you got tomorrow's economic news, right? But let's just look at today's economic news calendar, right? The numbers, the key news events that you usually want to watch out for, right, are those that has a high impact news, right? High impact news events, hey, welcome back, Lawrence. I hope you can hear me better. Right? High impact news events are like, they move the currency a lot more, right? They move the currency a lot more, in this case, let's just look, like last week, there was a high impact news event for non-farm payroll, right? And that, we have moved the currency a lot, right? So this is where, you kind of want to keep a watch out for it, right? So let's look at it. Maybe let's look at for those tomorrow, right? Tomorrow, you can see that we have the, for China, we have the interest rate decision, right? We can scroll down and we can see all the different stuff, right? Canada has its unemployment rate, right? So, yep, this is one of the things we'll be talking about later, right? The consensus and the previous and the previous one. So everyone is expecting it to be 5.2%. What moves the market is when the actual result is different from the consensus, right? So let's take like non-farm payroll for tomorrow too, right? It's a big news event coming up tomorrow. So we look at it, right? We see the just let me scroll down a little bit more. Right? Oh, maybe it's in the non-farm payroll. Yes, non-farm payroll tomorrow, or is it? Let me just check. right? I'm just trying to find where's the button? Yeah. Oh yes, today. Today, right? I want to show you the difference between like a high impact news event or medium impact news event. You notice that this, I know you can't see it over here, but I'm going to scroll all the way up to here. This is the actual consensus and previous, right? What moves the market is if the actual value is different from the consensus, right? Not so much of the previous, kind of only comparing the actual and consensus, right? Because if something is different from the actual, from the consensus, that's where it kind of moves a little bit more. Okay, so these are more or less the values you want to look at, but it looks a little bit daunting. There's so much stuff. There's balance of trade, there's interest rate year on year, right? Month on month, non-farm payrolls, quarter on quarter, right? There's a lot of stuff here. But the problem is that it's more, you think about it as this concept, which I want to explain to you. And it is called, let me find it. It's called known unknowns, right? So you're going to ask the question like, what are known unknowns? Known unknowns are basically, it's coming, but it's an unknown outcome. Okay, let me repeat that once again. It's coming, but it's an unknown outcome. For example, non-farm payroll is coming, it's an unknown outcome, right? As you can see in all this over here, right? Let's just say we got a high impact news event here. ECB interest rate decision, it's coming, but it's an unknown outcome, right? And the more you see this, right, this is where it affects your trading strategy, right? Because if you know it's coming and you do not know the outcome, that means you are leaving yourself to a very big volatility or unpredictability that might happen there. You could be right on your trading strategy, right? You could be right on your trading strategy is going exactly in the direction you expect it to, right? But suddenly, out of nowhere, right, this crazy news event comes in, and it just wipes out all your profits, right? So it's this is an important concept that you need to know, right? When it comes to fundamental analysis, especially trading the economic news, the economic calendar, there's a lot of these things called known unknowns, right? So how do we handle it? Let me share it with you in this next slide, right? This is based on what my team created as the time times price sensitivity matrix. Let me just explain really quickly what it is. So for example, on the top here, we've got technical analysis, we got economic releases, and we got fundamental analysis, right? On the left here, we've got 3 different trading styles. We got scalping, we got day trading, and we got swing trading. Let me just see if I can draw. Just draw using a little thing here. Yeah, we got we got scalping, we got day trading, and we got swing trading over here, right? So how this actually affects the the known unknowns, right? How is this affected, right? So if you're a scalper, your reliance on technical analysis, let's go one by one. The reliance on technical analysis is really high, right? Your reliance on economic news releases is very high because of the impact, right? As a scalper, your stop loss and take profit placements are probably very, very tight. Maybe you're talking about 5 pips, 10 pips, right? Very, very tight, right? And because of that, you must be very aware about the economic news releases, right? In the economic calendar, right? Imagine taking a trade right before non-farm payroll. You might be right, but because of the volatility, how crazy it goes, you might get wiped out. Okay, so that's very important when it comes to economic news releases. In terms of fundamental analysis, right? Fundamental analysis, it actually has a pretty low reliance. What does that mean, right? That actually means that if you are scalping, let's just say you're scalping gold, right? You're trying to take a small scalping trade, maybe 5 minutes, right? Or maybe like 10 or 20 pips on gold, right? Your long-term view on where gold is going to go by the end of the year is not relevant, right? Imagine you have this super long-term view that the world is where in this 2023 is going to be a bearish year for gold because of all this uncertainty, the interest rate hikes, all these things that are going to get people rushing to the safe haven. You are bearish on gold on the long term, right? For next 2 quarters, right? Next 6 months, you're bearish on gold. That view is not going to affect your scalping trade. That view is not going to affect your trade over the next 10 minutes when you're scalping. Okay. So then we go into day trading. Day trading also has a high reliance on technical analysis, right? It also has a high reliance on economic releases because, you know, in a day trade, your stop loss and take profit placements are, you know, probably not that big, bigger than scalping, but not super massive. You know, looking to try to get out of the trade within the day, right? So you do have is high to medium impact. Economic news releases do impact it on a medium to high basis, right? And you do have a little bit of a reliance. You have a medium reliance on fundamental analysis. Okay, you have a medium a reliance on fundamental analysis. That means you roughly it's kind of important to know like what is going to happen for the day, right? What is going to happen for the day, right? And you know it's not that strong. Risk on, risk off, these are things that, you know, can be very useful for you when you're taking these trades. But yeah, it's something to watch out for when you are day trading. I'll be showing you how you can use fundamental analysis along with technical analysis very effectively later. Okay. And lastly, you know, we have, you know, if you're a swing trader, you have a medium reliance on technical analysis, right? So you know, technical analysis is important, but you don't need to go crazy about, you know, technical analysis, right? If you're a swing trader and if you're a position trader, right? Technical analysis is important, but it's not that great. Economic news releases are rather low impact, right? Economic news releases are rather low impact, meaning that, just give me a second, right? Meaning that it is, I can show you a chart later, right? I can show you a chart later how, let me see if I have it here for you guys, right? Probably not yet. I can show you how a big news event like a non-farm payroll, a super big news event looks really, really big on the 5-minute chart or the 15-minute chart. But if you go into like swing trading where you're looking at like 4-hour charts, or you're looking at like 1-day charts, you know, it looks super tiny, right? So for swing trading, economic news releases are not that important, but what is really, really important is the fundamental analysis, right? Your long-term view on where gold is heading, oil is heading, right? Over the next 1 month, over the next 1 week, this is very important when it comes to swing trading, right? So when it comes to fundamental analysis, right, what I want to tell you is that what we're learning today, right, is depending on your trading strategy, right? Depending on your trading strategy, you know, you don't need to be that crazy over it, right? If you are a long-term trader, if you're a swing trader and position trader, yes, you have a high reliance on fundamental analysis. Day trading, you have a medium reliance, but if you're a scalper, right? If you're a scalper, fundamental analysis is not so, it's not going to affect your trading that much. Instead, you should be focusing more on the economic news releases, right? The big economic news release events, right? Because that kind of volatility can really, really affect your trades. Okay, you might be right, you know, in the right direction, but because of the crazy volatility, it kind of weaks you out, right? So these are important things to consider, right? These are important things to consider when it comes to how much you can or you should apply fundamental analysis into your trading. Okay. Now, moving on from here, let me just move on to the next slide. Again, guys, if you have questions, I recommend you guys to ask it right away, right? Ask it right away. I'll do my best to answer the questions along the way, right? So, for example, this is scalping, right? And this is my main trading strategy. I'm a scalper, right? I go in really quick and in and out fast. My hit rate's about 70 to 80%, right? Risk to reward about 1:1 to 1:1.5, right? So my trading style is scalping, right? It might look a little bit crazy to you guys over here, but you can see over here how I have, let me just pick up my drawing tool, right? I've identified all these levels here as a key support level, right? So I'm looking to play the quick bounce over here, right? So this is scalping, right? I'm even using the 1-hour chart on it. Okay, so this is scalping. And what happens is that, let me press escape. How do I clear and mouse? Okay, yeah. So what happens from here, as you can see how price comes down, touch the entry level we just identified, bounce up really nicely and hit our take profit, right? I'm going to zoom in here. This was exactly how it looks like, right? This was how it touched here and it went here. Now look at this trade, right? Just look at this trade over here, right? You notice that price just touched this level. Oops, just let me get bigger. Yeah, price just touched this level. right? And then it bounced up to our take profit. Our take profit is right over here, right? It's a super duper small trade, right? 1, 2, 3, 4, maybe 4 bars, and you have hit your profit target, right? This move in that 4 hours that pass, I don't need to know what's going to happen to the Kiwi dollar and the yen, Japanese yen. Do I need to know what is the Bank of Japan interest rate decision over the next, like, how it's going to affect the rest of the year, the rest of the quarter? No, I do not need to know. I just have a super high reliance on technical analysis in this case, right? Super high reliance on technical analysis to call this bounce. So that's an important thing to take note of if you are scalping. Right? If you are scalping, you don't need to go that crazy into fundamental analysis, but you do need to know you do need to know your technical analysis very well. Okay, I repeat that again. If you're scalping, fundamental analysis is not super important, but technical analysis is. Right? I'll be showing you how you can apply fundamental analysis with technical analysis for day and swing trading in a bit. Okay, now let me just move on from here to the next thing. Right. Of course, we can see, this was the exact trade we took on Kiwi yen, right? 2 really, really quick scalping setups and made some good money from there, right? But this is exactly how it looks like. Okay, scalping, you just get in, right? The time you get in and time you get out is super fast. 6:05 over here, 9:21, so 3 hours and 16 minutes. Okay, now moving on from here. What is macroeconomic analysis, right? Macroeconomic analysis basically is measuring. There are 4 things that you need to measure. Okay, 4 things that I need to measure. I'll go through this quite quickly, right? I'll go through this quite quickly for one reason, because I feel that you can learn this, right? You can learn this yourself outside, right? But I just want to highlight it to you, right? I just want to highlight it to you on what are the 4 things you should focus on when it comes to macroeconomic analysis. Okay, it basically is looking at a few key figures, right? It's looking at a few key figures in your, what's the word for it? Of a country's health, right? Let's just take a quick look at this, right? The first one is interest rates. Okay, the first one is interest rates over here, right? Just give me a second, right? So the interest rate, let me just move this so that you guys can see, right? Yeah, the interest rate is basically a cost of borrowing money, either by individuals, companies, or even governments, right? So you heard of the recent Fed increasing the interest rate. So it is more expensive for people to borrow money, right? So how does that affect? If you increase the interest rate, right, people and companies borrow less, right? Now follow my logic here. They borrow less, they have less money to invest and to spend, but if you reduce the interest rate, right, suddenly these people, it's so cheap to borrow money. I can go anywhere. I can just borrow money. I can use it to spend. I can use it to invest. That's great, right? So this is how interest rate works. Okay, if it goes up, borrowing goes down. If it goes down, borrowing goes up, right? So how does that affect growth? Interest rate go up. This means that what people are going to do, right, because it's more expensive to borrow money, right? Let me see if I can just use my drawing tool over here, right? So if interest rates go up, right, what happens to savings, right? You got savings over here. Savings, right? Savings would go up because more people are going to start saving money, okay? And hence your spending, right? Spending decreases. Spending decreases, right? And this would lead to growth. Right, so you can see how it all is. I'm drawing it out here for you, but what you can do is you can understand the logic behind it. Okay, your interest rates go up over here because it's suddenly so expensive. People are like, hey, let's start to save a little bit more money. They save more money, right? When they save more money, what happens? Their spending goes down. When the whole country is spending less, the growth goes down. Okay, the opposite is true. When you decrease interest rate and it is cheaper, right? It is cheaper. People are going to borrow more, right? People are going to borrow more, and so basically they're saving less, right? They're going to spend more, right? And then their growth is going to increase, right? So who decides these interest rates? Is that the central banks meet every month to set these interest rate levels, right? So that they know how to stimulate the economy. Okay, now let me explain really quickly how this affects 3 areas, right? The currency market, the stock market, and the commodities. Okay, if we're talking about currency, right? Like the US dollar, euro, if a country increases the interest rate, what happens is that it attracts foreign investment. This increases the demand for and the value of the home country's currency. Okay. Now stocks will drop, right? Because stocks and interest rate are negatively correlated. Higher interest rate implies that cost of borrowing, for these firms will increase, and it has a negative effect on stocks. Now, if you think about it, what happened recently? I mean, not so recently, right? We have the Fed. The Fed recently increased the interest rate. When they increased the interest rate, what happened to the stock market? What happened to Netflix? What happened to Amazon? Right? They all took a massive beating, right? Their stock prices dropped. Why did their stock prices drop? It's because these companies, they rely on these high growth companies, right? They rely on borrowing a lot of money, right, to spend to facilitate their growth. If interest rate was 0%, they'll borrow everything, right? Borrow so much just to spend. Right? Suddenly, right, because they're borrowing such a huge amount, when the interest rate goes up, they're like, whoa, man, that is expensive. That's now pretty expensive to me, right? And that's the problem. And that's how interest rate, if it increases, that it causes the stocks, right, especially high growth stocks to drop. Right. And then, of course, the interest rate increase, your commodities will drop too, because, these companies, right, they require a lot of gold, oil, right? They stop production, right? And commodities will drop too. Now, going to the next one here. Okay. Now I'm going to talk about inflation. Let me just erase my drawings. Okay, all my drawings over here. Okay, let's talk about inflation. Inflation is the increase in the prices of goods and services in the economy, right? Just to put things into perspective, right? When inflation increases, more money is needed to purchase the same goods, resulting in decreasing growth. Now, what does it mean? Let's think about it, right? I'm not sure, we're all coming from different countries, right? I think some of you guys from South Africa, some of you guys from UK, from England, right? What was the price of a McDonald's, a Big Mac, right? What did it cost maybe 20 years ago, right? Maybe a Big Mac, right, cost $2 20 years ago, but now it costs $6, right? So that is, in the simplest terms, that is inflation, right? So as inflation keeps going up, this actually reduces growth. There are two main data that we look at, right? I'm going to write it out for you over here. There are two main data we use to measure inflation. One is CPI. CPI is actually this thing called Consumer Price Index. As the word suggests, C is consumer, right? It's for us consumers, right? So it measures the inflation by measuring the changes in the price of a basket of goods, market basket of goods, right? Stuff that we consumers buy. Then there's the other one, PPI, right? You notice that the last two words are usually the same, PI, price index. PPI is the producer price index, right? So it measures inflation through the change in the production prices of goods and services. Right. So now these are the two things that you normally look out for. You go to any economic calendar, you can see CPI there, you can see PPI over there, right? That if you're looking for inflation, you're looking to measure inflation, right? That is the numbers that you want to look at. Now, sure, now that we roughly know what to look out for to give us an indication if inflation is going up or down, right? What we then want to do is to know how to apply this knowledge to trading. How does inflation affect the economy, right? So inflation affects the economy directly, as high inflation rates prompt the central bank to increase interest rates. Okay, now let me see if I got a quick explanation for you over here. Okay, central banks use interest rates to control inflation. Okay, remember what our previous this thing over here, interest rates. Right. So remember, the central banks are the one controlling these interest rates. Okay. They use this tool to fight inflation. Okay. Because if there's higher inflation, it means that the currency will strengthen. Right. When inflation increases, central bank tend to increase interest rates. And this causes an increase in the value of the currency. Let me just draw it out real quickly for you guys over here. Right. So if there is high inflation, what happens is that the currency, this actually causes the central banks, right? The central banks, right? They will increase interest rates, right? So this is interest rates. They'll increase interest rates. And what happens when you increase interest rates, right? You increase the value of the currency. So the opposite is true. So what happens, right, is, remember, when we increased interest rates, who were the people who suffered really badly? It was the stock market, right? Suddenly they're like, oh man, it's so expensive to borrow money, right? So the stock market, right? The stock market will drop. All right, stock market, especially the high growth ones, it tends to drop, right? And then of course the commodities would tend to strengthen, right? So this is something you need to take note of when inflation, especially when inflation is increasing, right? You notice that it's all of it affects one another. Inflation increase leading to the central banks, right, to increase interest rate. Increasing interest rate causes the currency to strengthen, right? And then it causes the stocks to weaken, right? So it's all kind of related one way or another. Okay. Now, I'll be showing you how I applied all this in forecasting. I think the China yuan, right, S&P, right, which was actually some of the calls that won us our awards, right? I'll be showing you how we do it later, right? But I just need to touch on two more things. One is growth, right? So growth measures the health of the economy, through the increase in, goods and services produced, right? The key thing that you want to look out for here, right? How do you look at growth, right? GDP, man, gross domestic produce or product, right? This measures the value of all goods and services produced within a country. Okay, this measures the value of all goods and services produced within a country. A few of the other things that we also look for, right? First is the international trade balance. International trade balance, right? This measures the difference between imports and exports, right? And then the last one is that we have the retail sales, which measures the growth through consumer expenditure. And it's more or less used to assess the direction of the economy, because more people are spending means it's better, right? So actually economic growth is one of the most watched indicators, because, it enables increased living standards, improve tax revenues, helps create new jobs, right? And all of it actually improves, okay? Now, I don't want to dive too deep into this, right? I don't want to dive too deep into this because it can be quite dry, right? Looking at these few things over here. The last thing that we want to look for is unemployment, right? Non-farm payroll. These are things that people look out for, right? So it's actually one of the biggest things that people look out for, unemployment, right? It basically, yes, it looks at a job market, right? Because if your economy is healthy, right, that means there's availability of well-paid jobs, right? There are a lot less people are unemployed, right? So this unemployment figure is super duper important. They need to take note of. In super simple terms, right? Right? If unemployment increases, right, are consumers going to spend more or spend less? If you think about it, unemployment increases, right? So non-farm payroll is saying, look at the numbers that, oh man, we got a high unemployment number. How does this affect your trading, right? How does this affect the trading, right? High unemployment means that people are going to hold back on spending. That means that, oh man, economy is not so safe, right? If it was super safe, remember the time when COVID happened, right? People were losing jobs left, right, and center, right? Companies were cutting back. They're like, oh man, we suddenly, there's so much uncertainty in the markets, because of the lockdowns, they needed to let people go, right? They needed to fire a lot of people. So unemployment shot up. When unemployment increases, are you going to be spending more money? Are you going to be spending less money? Right? You're going to be spending less money because you're like, oh man, I don't even know if my company is going to close down, right? Next week or next month, right? I'm looking, there's suddenly, the economy feels very unstable, right? Just think about back to the COVID days, right? When everything is just so unstable, right? When you're just so worried about unemployment, right? So when there's high unemployment, your consumer spending goes down, and this, you use less money, right? And hence, growth goes down, right? And then, of course, the currency weakens. Okay, so that is don't try to draw out a whole a whole diagram here on how it affects one another. Think about it from a logical perspective, right? As long as you understand, right? High unemployment is never good, right? High inflation is never good, right? Just think about it from that perspective. Then you more or less know how it's going to affect the currency and the markets. Okay. Now I'm going to show you, right? I'm going to show you really quickly over here, right, how we actually use this to forecast. So this was the what's the word for it? This was some of the examples, right, where we forecasted this. I think it was back in 2020, right, towards the end of 2020, right, when it was the presidential election. So it's all recorded, all live, right? And I was forecasting, right? I was forecasting dollar CNH. CNH is the China yuan, all right? And of course, let me just show you how I use technicals and fundamentals to forecast. If you know how to combine these two things, you can be a very good trader. Some things I'm gonna highlight to you over here. Firstly, right, we are looking at the 1 day chart. We're not looking at the 1 hour chart. We're not looking at a 4 hour chart. We're looking at the 1 day chart, slightly longer, right? Then we look at technical analysis, right? There's some very nice overlap support over here, right? I explained you guys in technical analysis 101 last week, right? We will be explaining more technical terms moving forward. There's a strong descending channel over here. It looks like price was breaking it. And if you use Fibonacci correctly, the key target that you're looking for is over here. So we are forecasting for prices to drop down. But this is from a technical perspective, right? This was from a technical perspective. We then looked at from a fundamental perspective, right? So this was what I said, right? I think regardless whether Donald Trump or Biden wins, right, both regiments will be China exchange rate hawks, and they'll insist that exchange rate adjusts to reflect bilateral trade balances. I know it sounds a little bit confusing, but the People Bank of China is going to have much more potent stance to yuan appreciation as the country has reduced its reliance on exports. A few things you want to take note: as long as there's no further US-China tension, we could see the yuan strengthening. See, this is the part here. We could see the yuan strengthening, and of course, with my little bit of bias that the dollar is going to weaken, we can expect the dollar CNH to drop to 6.40 level. You can see this was where we forecasted it, right? And of course, it went all the way down to 6.40, right? From October, right, to February. How many months is that? That's 4 months, right? So think about it, right? Yeah, this is 4 months, right? So that is how, if you're a long-term trader, if you don't have that much time to trade, you don't take long-term positions, you need to know your fundamentals. You need to know the big picture, you need to read, and you can have a bias, right? It's like, yeah, does it make sense, that the yuan will continue to weaken? We expect it to strengthen, hence dollar CNH should be dropping. This can also be applied to indices. We are calling the move for indices, right? Same thing over here. Let me just draw it out for you guys. Same thing over here. We got a very, very nice overlap support over here. Price was bouncing once, react off this level, bounce off, and it's going to bounce off again. We did a whole bunch of Fibonacci. It looks slightly hard to see, but a whole bunch of Fibonacci. We are forecasting for prices to kind of go up from here, right? To kind of go up from there. Okay. Now, this was a technical perspective that price is going to go up. How did we combine fundamental analysis with this, right? Very simple. Regardless of a Biden or Trump victory, we expect the stock market to continue to do well. Recent jitters we're seeing has more to do with uncertainty than the long-term outlook of the market. Our fundamental bias is that we could see SPX continue to rise. This lines up with the support we're seeing on SPX. Now, how does it look like? Oh, shucks. Did I seem to have lost the chart there. Yeah, minor problem. This is from November. Let me just see if I can pull out the chart. Right, I don't have. Oh yes, here. This is the SPX forecast. Right, you can see how price touched this level. We forecasted it touch this level and go all the way up, and it has done that. Perfect combination of fundamentals and technicals. Okay, remember it's a long-term trade, right? We are using the 1 day chart, and if, of course, IronFX, we offer equity trading. You can also use it for Tesla. Right? No, I mean for equities, right? In our case, we are using Elliott wave theory. I'm not sure how many of you guys here know Elliott wave theory, but it's a pretty good it's pretty good to use, but it's not easy, right? We're looking at long-term wave 1, 2, 3, A, B, C, D, E, 4, wave 5 projection. So everyone was saying that with Biden potentially winning, right, they're going to expect prices to go down, but we were forecasting for prices to go up even up to here, right? So how did that work out, right? If you apply a little bit of fundamentals, this was our view on it. From a fundamental perspective, we expect Biden win to be a good sign for Tesla, because he's very pro, he's pro green, basically ECG. You know, they like the green technology, right? So from a technical perspective, right, Tesla was within a triangle configuration alley wave theory. We expect prices to go up. With both fundamentals and technicals lining up, we made the bull call for Tesla to rise up to 600 at a time when everyone was saying it has reached its peak, right? What has happened since then? You know, this was when we called the move and it went all the way up. That's how you use fundamentals along with technicals when it comes to trading. Okay, this is how you use fundamentals along with technicals to call these moves. Now, right, you will require a little bit of guidance when it comes to trading. This is where I am glad to announce to you guys that we're just launching the VIP room. I'm going to show you guys how to get access, right? It's because we're just launching it, you're going to have, it's going to be slightly quieter, right? You know, I got my team in there. We can answer questions along the way, but we will slowly be increasing the amount of analysis we put in there. A lot of good setups, a lot of good trades for you to look at. All right. So this is the part where I'm showing you how to get access to it. Okay. In the room, in the VIP room, you'll be able to get direct access to me. You'll be able to get direct access to my other prop traders. And that is a place where you can practice your analysis. Now, let me just show you how to get access to that. All right. You have this place, vip.inrfx.com. Okay. You want to go to this link over here. Actually, do I have a, yeah, I might have it over here. So when you go into here, right, you go into here, this is how it looks like for someone who's joining for the first time. You'll notice that on the right side, right, you notice that on the right side, there's nothing, right? There are no words by the right side. There are no channels. What you want to do is you click on this thing called request access, right? Now, as long as you have an IronFX account, if you have a live account, you have access to all FX. If you have a silver account, meaning that you have more than $1,000 with IronFX, you know, you get access to commodities. If you have more than $10,000, you get access to indices, and you get to direct message the prop traders that we have, really profitable traders, right? And then if you have more than 50,000 or 100,000 in your account, you get to direct message me, the chief trader, right? So what you're gonna do is click on this thing called request access, and they're gonna ask you to attach proof of your IronFX account to get access. You want to click on this, request to join access. Please see my screenshot, right? This, for example, and click upload file. So in this case, you know, I'm going to upload something, right? I'm just going to upload something super simple. Maybe I'm going to upload this, right? Bam, there we go. Of course, what you want to do is you want to upload a screenshot of your account, okay, an IronFX account. Okay, once you're done, it shows that your request is pending approval. Now, how it looks like for me over here, right, is that I will notice that someone has sent in a request, right? We got our friend AABBCC over here. Please see my screenshot. Clicking on this, all right, you know, this is a nice screenshot of your account, having IronFX account. I'm going to accept the request. I'm going to give you a gold tier, right? So when that is done, I'm going to come back to here, right? And you see my account over here. I suddenly have access to all these different charts, all these different analysis by the side. I'm going to show you how you can use this in your trading to be a better trader. This is the part where you can ask us questions, right? Let's just say you're looking at this 1 hour chart on pound dollar and you're wondering, right? You want to draw this line over here and you say, okay, hey, Ed mentioned, hey Desmond, right? Do you think this might be a trend line breakout? Right? What is a trend line breakout? So this is a handy little part, right? You can highlight the text over here. You can click this button called link object to text. And then you can click whatever you just drew on the chart, right? You just click on this little trend line over here. You notice it lights up. You send this message through, confirm, and you send it through. So you know, I can see that, you know, you have asked this question over here. Let me show you how it looks like from my side, right? From my side, I'm over here. Right, I can see, hey, Desmond, do you think this is a trend line breakout? When I hover my mouse over here, you can see it lights up. So I know exactly what you're asking. I know exactly this is the thing. Of course, if I think it's great, you know, I give you a nice little thumbs up over there, right? Good stuff. I'm going to view the discussion and I can say, you know, hey, AABBCC, right? it does look like a nice trend line breakout. Okay, I can just comment over here and give you a feedback, right? And then of course over here you can see, all right, Desmond has just replied to you. Yeah, it looks like a nice trend line breakout. You can keep track of all the analysis over here. Okay, so that's the important thing when it comes to using this room. You use it to ask questions. Technical analysis, fundamental analysis, you can come in here, all the different rooms by the side, you can just come in and you can ask any questions you want, right? You can talk about markets, you can talk to us. You know, we're looking to slowly but surely build a nice little community of traders, right? I'm going to send the link to you guys, right? What is the link that you want to go to? You want to go to this link over here. Yep. VIP.ironfx.com, right, /app, right? So you want to go in, you want to register for a brand new account, right? Register for a brand new account. When you're in there, you know, just need to attach proof of your IronFX account and we'll get you access to it. Okay, I will approve it and I will slowly get my team to come in here. You will be the OG group, right? OG group meaning that, you know, you'll be the first few bunch of people who are coming in here, right? And it'll be nice to grow the community together, right? And of course, we have this little thing here where, let me just put it out over here. Sorry, you know, we have this little thing over here where I can't find it. Yeah, we have different little XP and stuff, right? So the more you participate, the higher level you rise. You know, you send messages, you know, you reply to people, you create analysis comments and stuff, you know, you rise up the ranks, you know, you rise up the ranks, you know, different levels. And most importantly is that we're going to give you different prizes along the way. You know, the higher you rise up the rank, you can see this little XP bar at the top, right? We're going to give you some exclusive indicators that cost anywhere from $150 to $350 per indicator, right? We've got some exclusive indicators to give you in there once we implement that. All right. So yeah, guys, I hope you found this session useful, right? If I can see some questions coming in, right? Lawrence is asking, right, apart from the 1 to 5 minute spikes, what happens when I answer live, right? Yeah, so apart from the 1 to 5 minute spikes we see immediately after news releases, does news change direction of the market? Yes, it does change direction of the market quite a bit, right? The 1 to 5 minutes, yes, a lot of volatility there, but it does change the direction of the market, right? Suddenly, usually, if it's a big enough news event. If it's a tiny news event, right? If it's just like one of those medium impact news or low impact news events that don't affect it that much, it doesn't change. Imagine, right, like the non-farm payroll results, suddenly it's a big news event, right? And like we're seeing unemployment numbers like we've never seen before, right? It causes the market to shake up a lot. That is then, right, there's a first initial volatility, but not everyone is trading the market at that point in time. Soon, when more and more people wake up throughout the day, you know, they're going to look at it and like, oh man, unemployment is terrible. I need to slow down my spending, right? I need to save a little bit more money, right? The companies start looking at it, right? And they're like, oh, wow, man, the economy is not doing that great. Then they start to affect the economy, right? So yes, a big enough news event is going to cause a lot of volatility. There's going to be a lot of movement, but it then will slowly also affect the rest of the market. Right? Don't expect the market to go crazy in one direction, right? Usually is how the rest of them play it out along the way. You know, some will say, actually, unemployment is not that bad. You know, it's only because of COVID during this point of time. We're going to recover from it, right? You need to see how it plays on after that. But yes, usually after there's a spike, if the news announcement is big enough, that's where you can really start moving the market a lot more. Okay? All right, guys. So I hope you found this session useful. I want to encourage you guys to go to this part here, IronFX School webinars, right? So webinars is the link that you're going to go to, and we have a live trading session tomorrow, right? We have a live trading session tomorrow. Please register for it, right? I'm going to send this link to you guys over here, right? Please register for a live trading session tomorrow. It's either going to be me or Cassandra who's doing it, right? I think it might be Cassandra, right? So it's a pretty fun event, right? I think live trading session, I think this might have been done by her previous. Oh, no, this was me, right? Or could be technical analysis 101 that was done by her previously. Oh yeah, so yeah, Cassandra might be doing tomorrow's live market analysis, right? It's a pretty fun session, right? Pretty fun session where we look at the markets, we trade it together, we look out for some nice trades. And if it works out well, everything is recorded here for you guys. So there's no running away from it when we do these live trading sessions. Okay. Now, please sign up for it tomorrow, for our webinar tomorrow, live trading session, right? Otherwise, if there's no other questions, thank you so much, right? Thank you so much for staying through this entire webinar, right? Staying through this entire webinar, watching it, right? It's great to see a couple of familiar faces, right? Familiar names, right? I hope you found this session useful, right? I'll see you again next week as we dive into more different topics. Otherwise, it's either me or Cassandra is going to catch you tomorrow for our live market analysis. Okay. Thank you very much, guys. Stay safe, trade safe, and peace out, guys. Right. Lawrence, the video will be on YouTube, right? Video will be on YouTube. Thank you, Arthur, for staying true. Right. Where's the YouTube? Sorry, I need to send the link to you guys again. This is the YouTube, right, Lawrence? This is the, oh, sorry, not this. Yeah, is that, did I paste the correct link? I need to copy this, right? Yeah, this is the link that you can go to. It contains all the different webinars that we have, right? So go check it out, right? This one should be uploaded there soon. Okay. Thank you very much, guys. Stay safe, trade safe, and take care. Bye-bye.
Hello everyone, my name is Emily and today we're going to talk about money management. In this video you will learn what money management is and how to apply it. In its broader sense, money management is a tactic traders follow to preserve their funds. This way they limit the risk of their portfolio while potentially maximizing its returns. In any case, money management is the aspect of your trading that greatly influences your profits. So it is an important part of a successful trade. In fact, according to studies, almost 90% of the divergence in a trader's performance is because of money management. Although it's not complicated, it requires discipline. Interestingly, irrespective of having a solid trading plan in place, without money management, you could still lose money. However, with a good money management system, you could improve your plan's performance and potentially have great returns as well. The basic elements of money management are the following: a stop-loss order for each trade, a certain amount of funds to risk in each trade, and the maximum amount to risk in a certain period. So the question is, what amount of risk should you take? According to experienced traders, you should never risk more than 1 to 3% of your equity in total in a trade. More aggressive risk could take your account as high as 20%, but there will be larger swings, and this could affect your judgment. It is true that every trader sees risk in a different way. However, the time you have to put in your investments, availability of capital for present or future movements, personality, and risk tolerance are some factors affecting how you see risk. What is important is to keep your risk small and constant, and remember that one trade should not matter. Thank you for watching.